Hello traders, Jeff with optionboxer.com. Got a quick video today looking at GLD or the Gold ETF. Before I do, please know that I am not a registered financial advisor and this is in no way a recommendation for you to buy or sell any security or place any options or stock trade on GLD, or I guess ETF trade on GLD. So quickly I want to look here. You can see, well, I guess it'd be better for the video if I draw it right on the point there. So you can see we've got a longer term downtrend. We've also got a bit of a pullback here, a shorter term uptrend. But what I really want you to see is in this long term downtrend, we've also got the MACD moving higher. So we've got a divergence happening there, and that's usually a nice indicator to let us know that we may see a change in trend. And of course, we've already seen that change in trend right here, but I think that this particular pullback will last a bit longer and continue maybe a bit higher before becoming range bound or reversing again. In any case, let me show you how I came up with that conclusion, or why I believe that to be true. So let's take a look here at Fibonacci. So you can see price dipped all the way down to 110, 111 area before pulling back to the 23% area and breaching it. Fell back under it, but now it's breached it for a second time, which means price did not want to stay below it, and so I think it will act as a potential support line to reach maybe this 118 level. So let's look at this shorter term uptrend to see if we can determine any maybe similarities between the two. And so the first thing that catches my eye is this area here. It's right around 115 area. Right there where that kind of that thick white box is kind of the first area that catches my eye. The next area that catches my eye is right here around this 38.2% line, or the zero line. And so I'm going to take the Fibonacci lines off, or the Fibonacci drawings off, so we can see this a little more clearly. Alright, so you can see this would be my two levels. I would think that somewhere in here would be a nice buy zone, and somewhere up here would be a nice profit target zone, so we can see things a little more clearly. So we've got our entry target here, we've got our exit target or our profit target. Now we're looking for a potential stop loss area. And I think the most obvious stop loss area would be right about here. You can see what happened at this level. So price came up to about the 114.70 level before reversing, came up again, reversed, came up, breached it, reversed again, found support at the 114.70 level, again went up, came down, breached that area, and then right here you can see it acted as support again. And so I'm thinking if I'm just being honest with you, we may breach this 115.28 level, and we may find support again at this level. So it may not be the most ideal stop loss. And because of that, I think we need to probably try to find a more reasonable stop loss, which would be at these lows here. So you can see price kind of chopped around this 113.50 level for a while before finding support here. So this would be kind of our buy zone, but we can account for such a large gap between our buy and our stop loss target in the setup of our trade. So let's take a look here really quickly. You can see volatility is relatively high, so compared to itself, it's a bit high. So I think in the days ahead with this, if this thing doesn't indeed go higher, I think volatility will decline. So in light of that, I'm going to go out here to about 80, maybe 54 days to expiration, just depending. Let's see, we get 134 there. We get 174 here. So I think we can get a little more bang for our buck if we go out just a few days further. And so you can play this a little safer and go further out of the money, or you can get a little more aggressive. I'm going to go right at the money, sell a vertical here. I'm going to do a $2 wide, and when I say we can kind of account for that gap, we can get a little aggressive on our entry price. So price may pull back into this area, and that may be a more realistic entry point. But again, this level right here was kind of the level that Fibonacci identified. So I think maybe the most appropriate thing to do would be to just count this as our entry zone. So if price gets into this shaded area, I would say we could enter our trade, or now we can take a little deeper look here, remove those drawings. 78 is probably still really aggressive considering where price is at the moment, but if price falls back down to this level here that we identified kind of as our entry zone, about the 114 area, price pulls back down into there, you can see we would have could still get away with maybe getting to about 85. So if price pulls back down into this zone, you can see we get filled at our 85 because it's 0 here, and this is hypothetical, theoretical I guess would be the right word. But you can see we might get filled here at 85 if it pulls back into our zone, and then let's just hypothetically say 2 weeks go by, and now we're looking at December the 10th. If we get up to our potential profit zone around 117, you can see we'd make a nice $50 or $60 possibly if this goes to the higher end of our range, 61. So you can see it's not a bad setup. We've got a nice probability of profit if I take everything back to today's date. Of course, we're not going to get filled immediately at this price, but you see we've got a nice probability of profit. So 67% of the time this is going to be a successful trade. I think price will dip down and find that target zone we looked at, and then of course we just would wait for it to reach our profit zone. No guarantees, but that's kind of what my thoughts are at this moment. If you got any questions, feel free to reach me at optionboxer.com. Thank you for watching.